Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go through it together. It's generally related to three different topics: wealth building, commodities, and/or financial topics. Let's dive in there. Let's take a look, see what people are sharing. If you want to follow me, it's at Finding_Finance. And if you want to join our community, finding-value.com, I take all this information, gather it all up into a ball, figure out investment opportunities from all of this information. And it's not just from Twitter. I do a lot of stuff and thinking on my own. I use the three-pillar approach: technical analysis, ratios, and market conditions slash cycles is what that is. I'm looking for things that are down and cheap that give us the highest probability of success. I look for technical patterns that are bottoming to also increase our probability of success. And then the market cycles is when all of it turns. So when you get to a bottom of a cycle and it starts to turn higher, I am hoping that the technicals and the ratios align with the bottom of the cycle. And there you go. That's my investment approach for the most part. And then I hold during the entire commodity bull market, shooting for 10, 20, 30, 40 times my money, depending on the company and its ability to go up that amount. Coming in here, I've got finding value. That's myself. We've got some ratios here, but I just wanted to touch on this first. This is the natural gas price. It's starting to break out in terms of United States dollars. We've got a nice clear break here. We're up about almost 8% today on this breakout. And obviously we've got natural gas equities that are ripping in the background here. But what I like to do is I like to look at the ratios. So this is natural gas versus uranium futures pricing, natural gas versus oil, and natural gas versus Dow Jones Industrial Average. And obviously natural gas is looking very strong, even from the dollar perspective and all of these other perspectives, which we'll get into. The reason I look at this is some people get too focused on adding money to only one sector, and I'm only sampling these three. The best probability of success is to go out on the tail ends of the curves when things are cheapest. Those are the tail ends, the cheapest and the most expensive. So when I price natural gas against uranium, and this is just the futures spot pricing, you can see that we've gone up and down in a channel since 2008. Uranium is expensive, or natural gas is expensive at the top, uranium is expensive at the bottom. What we're seeing is uranium could be expensive to natural gas, or natural gas is just that cheap. Now, natural gas is a competitor, a fuel against some other asset classes for electricity power generation. And we are coming on up here, and this was a great opportunity to be looking at natural gas companies down here and the equities. Conversely, it's always good to be looking at these other bottoms too. But from 2020, in this general area here, it was preferable to buy natural gas over uranium. And I know a lot of people think, well, uranium, that was a great time to buy. It was for some of the companies. But if you look at the natural gas performance of the equities, they actually outperformed the uranium equities during this time frame, and it wasn't even close. There was a few that hung on in the uranium space, but some of these natural gas companies went ballistic. This is natural gas against crude oil, and you can see we are incredibly cheap. In fact, we were the cheapest it's ever been in the early part of 2024. That is the opportunity when no one's looking, no one gives a crap. Go buy a whole bunch, and now we are in the money, baby. We're way in the money. Some of those companies from the bottom are up. Some of them are up over 100% from their bottom, roughly. About 100% up already. And we barely are moving. We barely are into this move. And then we've got natural gas versus Dow Jones, and you can see the circle there. This was a bear market, a bull market, a bear market, and then we just entered a bull market here for natural gas, and we're doing a retest there. And I think we're going to go way higher in natural gas versus the Dow Jones Industrial Average. And yes, the Dow Jones could fall eventually, and natural gas will go up, and there could be a combination of those two things. Very well be the case. Here's gold versus oil ratio. Looks like a head and shoulders topping pattern. And then oil versus gold. I flipped the ratio. A falling wedge bullish for oil. Is inflation about to enter the system that gold was front running? Question mark. So what we have is an oil outperformance. You can see that we were downtrending and then we bottomed in 2005 and 8. That was the last peak of oil. That's when oil was $140 a barrel, 140, 150, right at 2008. We went into a big bear market all the way up to 2020. We've got a nice shoulder, head, shoulder, and a nice neckline developing right now. And we're at the tip of the right shoulder. If this comes on down, or when, I don't know if it's an if, it's probably a when this comes down from ludicrously cheap levels, a 38.4, 1 barrel of oil or one ounce of gold can buy 38.4 barrels of oil. Historically, that is incredibly cheap. This is when you get rich. You get rich by buying stuff when it's incredibly cheap and you've got the patience to ride it down. So we're at an incredibly cheap price for crude oil. But remember the one above, natural gas was way cheap to crude oil. So nat gas is off the page cheap. But if this comes on down, oh my gosh, guys, so much money is going to be made in the oil companies. It's going to be ridiculous. Then we've got crude oil divided by gold. And you can see it's a little bit different viewing it. You can see that we had a consolidation here. We broke out of crude oil outperforming. This is the last bull market in crude oil, a peak in 05 and a peak in 08. We had a double top. We came all the way down, consolidated in a three-hump consolidation, broke out of the consolidation. That means we're in a new bull market. And people don't understand this. You know, I was bullish in 2020 at the bottom. I said that oil by the end of the bull market will be multi-$100 oil, 250, 350, 500. I didn't know what it was going to be. We are in a bull market and people do not understand the consolidations and the breakouts. I don't think they understand anything. All they understand is if this goes up and I say 250, they think it's going to go up straight there. No, we are in a bull market. We've broken out of the consolidation. We are consolidating on top, and we're going to break this falling wedge to the upside at some point, probably in the near future. Here's the what it looks like. Another three-hump consolidation. In fact, this fractal is the same fractal. Yeah, this is the fractal that we saw back all the way in the 2000s. It's the same three-hump little movements and everything. And there's one, two, and then the third. And I think we're at the end of it or very close to it. Can there be a washout kind of move lower before spiking higher? There could be. There could be. That's that slingshot cheetah that I've talked about in other episodes. And then check out this, guys. So that's oil. This is positioning that's going on in the equities. And it's not just XLE. It's in XOP. It's in OIH, the energy service companies, and all this stuff. So positioning in XLE is occurring. Oil sitting on top of support long term. Move higher coming, question mark, question mark. Here we are. This is the big. So our consolidation was from 2008 to bottom of 2020. This is a consolidation move. The whole thing is. We are now in a new bull market from 2020 onward all the way up. We are in a new bull market. Last bull market before that, you can see that we had a high here, and this is what broke out and is going in a new all-time high. What I am saying is that we're going to get a similar move. We can look at it right here. Let's go to XLE. I'll show you what I'm talking about so you guys can understand what I am saying here. So we take this. This was our move higher here. And I hate to say this, but this is going to be something that looks like this. Like we might not have this same pullback. So I'm just going to expand it out. It's going to look like that. Now, is there going to be a pullback like this? No, but this is your original move off of the commodity bull market low. It comes on up. We had a huge pullback in this last one in 0102. And then we have the big move up. So I am saying that we're going to get a move that does something like that. Now, are we going to get this recession that comes first that we got like in 2000, 2001 here? That is yet to be determined. I don't know. And that's kind of what the big question mark is. Are we going to get a pullback? But here's the thing. If we're going to get a pullback, why are we breaking higher here in XLE? Makes me think we're going higher, not lower. And it could be inflation dynamics. Stagflation maybe is an outcome. And maybe we're going to break higher in oil no matter what. And it's not just XLE that's doing it. There's a whole bunch of energy companies starting to break out of downtrends. And there's still some that look pretty nasty. So there's that breakout that we are looking at. And this is the US oil price long term, just to give you a big overview. These are the consolidations in between. The bull markets are in between these consolidations. We ended the consolidation when we broke out of this. The bull market started in 2020 at that low. The commodity to stock ratio also bottomed at that low. We also have a downward move in stocks and bonds simultaneously, which also occurred in 68 and 2022 and 1930, wherever the bottom was here before heading higher here. 3 different time frames. And here we are sitting on top of everything, squeezing up for a potential move higher at any second. Honest question, how is Microstrategy not considered a Ponzi scheme? Microstrategy stock price goes up, sells Microstrategy stock to buy Bitcoin. This buying increases the price of Bitcoin. This makes the price go up more. And round we go. What am I missing? What happens if there's a prolonged major drop in Bitcoin price? My question is, why would anyone want to own MSTR? They don't pay a dividend. He specifically states that buying MicroStrategy, you cannot convert into Bitcoin. So if you can't get Bitcoin and maybe he's going to pay a dividend in Bitcoin. I don't know. But if you don't get anything from the stock, it would just go and be price appreciation. But his earnings would be the asset of Bitcoin, perhaps? I don't know. It's kind of a weird thing because you don't get any cash flow. He's just buying what people would consider to be an asset. I don't know. Instead of just listening to what Beijing says, look at what they are actually doing. While manufacturing all the green equipment to become a world leader, they're also the gargantuan world leader in climate emissions. Yeah, but this is an unfair comparison. You cannot do this because European Union and United States offloaded all of their high emissions things to China. And China is accepting all those high emissions things from United States and Europe. So how can we say that we are a climate change leader when we just gave it and handed it to someone else? I'm sorry, but this is just, I don't know, dumb. It's dumb. Oil price. So offshore oil is booming. Investments to hit 104 billion in 2024, driven by deep water projects in Guyana, Namibia, and Suriname. Suriname, however you pronounce it. By 2030, offshore could surpass U.S. shale as the top non-OPEC oil source. Correct. That's where the growth is going to come from. And I wonder what companies are going to profit off this. Oh, wait, we are in them. That's right. The Great Marti. Oh, look, mommy, a shooting star. Microstrategy overshoots the upper BB line. The rug pull gonna be biblical, in his opinion. You know what this looks like? Wave 1, wave 2, wave 3, wave 4, wave 5. And then the big pullback. He's actually right if you look at it from a wave perspective. Gonna be nasty. Gonna be nasty. Rickroll rhetoric. He says, I believe that the purchasing power of the United States dollar over the next 10 or 15 years will fall by 75% again. And I think as a consequence of that, at least in nominal terms, the gold price will do substantially better than what most people believe. If that is the case, you know what that sparks? It sparks a commodity bull market. And a commodity bull market is mainly driven by the loss of currency purchasing power because they are denominated in dollars. Makes sense now, right? So big moves in currencies create moves and money flow. Money flows move differently when the dollar drops like that. And it's coming. I agree with Rick there. Joseph Brown says the government has no money, no income, no profits, no surplus. Every dollar the government spends is taken from someone else, either through a one-to-one direct transfer taxation or many-to-one indirect transfer, which is creating paper for nothing inflation. That's Ron Paul's quote. The government only has what it takes from others. Christine Guerrero, let's read this. This is the Permian Basin at peak or plateau? And her thoughts about this. So she says, the question on every oil and gas investor and industry participant's mind going into 2025 is the Permian Basin at peak or plateau? Normalized well productivity defined as barrels per day per foot per first year. So that's a productivity measurement, is modestly deteriorating. Over the last few years, this deterioration has been offset by drilling more feet using longer laterals. However, Rystad Energy believes we are on course to drill less lateral footage this year. Disparities in acreage quality and market structure result in a range of break-even costs across the play and by operator. However, according to the Dallas Fed Energy Survey, the mean break-even cost for new wells has climbed 22 to 28% since 2022, and for operating existing wells, 11 to 31% since 2022. 70% of the remaining well inventory that is believed to break even is less than $60 per barrel, is now controlled by just 5 large operators per Enervus, namely ExxonMobil, Diamondback Energy, ConocoPhillips, Chevron, and EOG Resources. This is likely why rig activity has been flat for larger public companies over the past year, but has continued declining for smaller private companies since Q3 of 2022. The drilled uncompleted inventories declined by more than 70% since 2020. The remaining drilled uncompleted wells have been holding flat at maintenance levels since 2023. These conditions indicate that there would be no further increases in production without also seeing a forward increase in drilling and well completions. That activity is not justified in today's price environment. No more drilling in this environment. We need higher prices. So what do you think prices are going to do? What do you think drilling activity is going to do out in the future? It's going to increase. It's going to have to. And you know what happens when they don't drill? You're going to see declines. And if you see declines, oh my goodness, we'll see potentially a big gap between demand and supply if the prices don't rise fast enough. U.S. natural gas flows to liquefied natural gas export plants on track to hit a 10-month high on Wednesday. And we've got a whole bunch of capacity coming for LNG terminals. You know what else is coming? Cold weather. Cold weather. Jaguar Analytics left SMCI in February of 2024, right MSTR in November of 2024. We waste no time in boom and bust cycles. Who's next? Probably some quantum computing stock like IONQ, flying taxi like ACHR. There's your last wave four, the big move, SMCR. That's SMCR. And this is, or SMCI, I mean. SMCI after that big move is the bust. There's the bust after that move. MSTR or Microstrategy, we are in that move. You can see the sideways action and then the move. So let's overlay it. Let's have some fun, guys. SMCR. So let's just grab this. There's the fractal MSTR. Overlay this beast. There we go. We can even make it a little bit bigger. Maybe it does something like that. That's the likely path that MSTR. And people are going to try to short this at the top here, guys. Don't be a hero. Let it kind of come up, come down, short it here, and then let it go. There's my micro strategy on how to play micro strategy. Dr. Leah, whatever, Ilya, however you pronounce it. Determining the fair value of oil based on its regression on inventories is from the past century. For something more appropriate, in his opinion, I refer to Chapter 7 of Virtual Barrels, where oil driving factors are numerous and their relevance de jour is dynamically selected. And he's got it being slightly undervalued at this price. I would most likely disagree with him. You can use inventories. The better factor using inventories is days of coverage. And then you want to look forward and look at to see what the cost curves are at. Right now, we're below some of the higher cost oil on the cost curves, which means oil is going to be cut back. Your inventory level also matters because we're at lower inventory levels around the world. So I would say that we are undervalued by 10 or 20 bucks. That's my guess, something like that. EIA says crude was a little bit of a build, gasoline up a little bit, distillate down and Cushing down. That's kind of where we're at there. Tavi Costa says natural gas prices are surging once again, resembling the behavior of energy markets during the initial wave of inflation. This often serves as a key leading indicator for rising consumer prices. And here it is, moving on up. Another wave of inflation is coming. We should also see oil move up higher too. China's oil imports are reportedly surging. Preliminary data indicate China have quietly tapped internal or friendly tanker capacity as Kepler track November oil imports to all-time highs. If true, the narrative may change. And there we are at all-time highs for China imports of crude oil. Uh-oh, here we go. Howard Marks, he says, I'm a great believer in the cyclical nature of the markets, but I never cease to be amazed at how far they can go in one direction and for how long. The extremes they can reach despite logical arguments to the contrary, and the swiftness of the swing back, says Howard Marks. Use that against MicroStrategy right now. Gold Telegraph says Japan and China are the two biggest holders of the U.S. government debt in the world, and they have been dumping. Who is buying? Tether. Oh, I love the irony. The jokes write themselves. This is getting too easy. Tether is the biggest buyer of government debt. Do you think anything's going on there? Do you see anything going on here? If Tether's the biggest buyer and Bitcoin's been moving up, do you think that they're trying to draw money in this way somehow? Here's CNYer, more in China on Wednesday. Freight index was up 2.3. Crude oil opened up 1%. China gold was up 1.1. Silver up a little 0.3. Nickel up 1.1. Zinc and copper both up 0.7. Looks like inflation's coming back, maybe. It might be. We've got corporate insiders are dumping stock shares at the fastest pace in more than 2 decades. So the S&P index and the ratio of sellers to buyers, people are dumping the financial assets, S&P and NASDAQ specifically. Ladies and gentlemen, we are close, says the great Marty. Hawk to a girl, Haley Welch. Thanks, Michael Saylor, for convincing her to buy Bitcoin. Yeah, it's a top, buddy. It's a top. I want to read this. Tether has minted over dollars out of thin air within the last week alone, which has contributed to the massive growth we're seeing across crypto. With the Department of investigating them, the fraud is running out of time. They're injecting as fast as they can before the bubble bursts. How this ends is very obvious, so invest at your own. SRS Rocco, when gamblers go to a regulated casino, they are guaranteed to exchange their chips for dollars. However, case for gamblers with Tether chips. Tether says you can exchange them for other assorted crypto or worthless meme coins. Buyer beware. And here it is. Tether is pegged against the US dollar at a 1-to-1 ratio. There is no guarantee from Tether Limited for any right of redemption or exchange of Tether to USD. USDT cannot be exchanged directly for USD through the Tether company. Nice. Very nice. So let's bring up the 500-ton brontosaurus in the room. When Saylor's suggesting a 20 million Bitcoin price in the future, that would equal a 400 trillion market cap, or roughly 4 times the total top 3 central banks' money supply. Have people gone completely financially insane? Well, that's what happens at market bubbles, guys. They go insane. And that's what we've end it there. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you like. Black Friday coupon code is active. And we'll see you guys on Saturday at 7 a.m. question and answer session. That's when the next one is, Mountain Time. Catch you later. This is Finding Value.